As the month winds to a close, analysts are saying Nigeria's stock market could see increased activities as investors rebalance their portfolio or positions for dividend flows. Muktar Mohammed, analyst at Assar Investments, joins me for more market movements. Muktar, thank you so much. Always a pleasure to have you with us.
Thank you, Esther.
It's a new week, but also the last trading week for the month of May. But let me ask you this. How would you describe trading in the month of May, perhaps in one word?
Good.
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 That is good.
Just good. I mean, there are a lot of positivity in the month of May. It's one of the months that investors got a lot of dividend payout. And some of those dividends were reinvested. And also, you know, in the economy that we have now, cash is king. So
sorry, but according to the SEC, 1.1 trillion was what was paid out. I mean, is that a big, I mean, compared to historical numbers, is that a big deal?
Historical number, because sometimes most of the companies pay all-time high. We look at a company like Fidelity, you look at even Access Bank, you look at GTCO, you also look at Zenith Bank. What they paid this period was phenomenal. Even UBA, they've not paid that. UBA paid 5 naira. I mean, GTB paid about 8 naira 5 kobo.
Right.
And also Zenith Bank paid about 5 naira. I'm talking about the final dividend.
Those are high numbers, right?
They're very high numbers. We've not seen that before in the market, especially in the financial sector.
So is this enough to, how much firepower does that give the market to the next, should I say the next, the next big thing, the next trigger catalyst?
I think it gives the market a lot of liquidity.
Right.
And you could see that in terms of volume gradually improved during the week, especially last week. We've seen volume going up by almost 17% compared to the previous week. So definitely those dividends are finding their way back in there, and coupled with the fixed income market is still attractive. But again, with the inflationary figure a little bit high, and then you're looking at the capital market in terms of capital appreciation and good dividend yield they have collected, and some of these stocks still have potential for high capital appreciation. So if before now you would have seen after the MPC meeting, you have seen a lot of movement to the fixed income space. But it's not happening like that because investors are still seeing value in some of this equity, especially some of the financial equities. And you shouldn't forget that some of these equities also will have to come to the market before the deadline of March 2026 for the recapitalization. So a lot of activities are still expected in the financial space especially.
Do you think there's an expectation on the part of investors with, you know, the dividend payouts, how high they've been, that this could continue?
I think there's a high, that's the challenge. There's a high expectation. But again, I think those expectations will be met from what we've seen in the annual general meetings of.
So, but what would determine that? Was it a significantly improved operating environment for not just the banks now? We know that obviously they're profiting from high government, fixed income securities and all of that. But for the other companies, other sectors, in the industrials, consumer goods. I think
for the industrial, the only good thing we've seen is stability in exchange rate. Even if I say it's in the corridor, you know, it's either 1.615, 1.610. So that will help them balance up, especially for most of these major companies that have suffered in terms of FX violation and FX losses. And the numbers are turning up positively. If you look at a company like Nigerian Brewery, you look at a company like Guinness Nigeria, even MTN Nigeria, Airtel Africa, Nestle, Unilever, you could see a lot of recovery in those spaces. Cadbury, so they are throwing so positive numbers. We see a stock like Presco almost hitting 1,000. I mean, so those numbers are coming in positively to the market, and I think those also. But in terms of dividend payout, I think what we will see, because most of them are not paying very, very huge dividends this year, we could see that impacting next year when they pay those dividends. So it will be like from 0 to almost a good percent. So that will help. But for the financial stocks, I think based on the AGM of some of these companies, you realize that they are still promising huge dividend payout to their investors, especially when the one that made it publicly that, oh, your interim dividend will be 1 naira is Access Bank. They told during their annual general meeting. So I think if you look at some of them also promised the investor good dividend payout, especially as regard after the recapitalization. But that will come up with a very, very big challenge, meaning that some of these banks will really need to put on a lot to be able to even continue to pay what they are paying now. But again, those that are recapitalized, like the GTCO of this war. I mean, their recapitalization is not complete yet. They paid a dividend of 8 naira. And also, you look at a bank like UBA, their recapitalization is not complete yet. They paid. But when you look at Zenith, recapitalization concluded. Access Bank, recapitalization concluded. Those are the ones that you can positively say they've said will be able to pay more dividends, and they will be able to do that.
What are you expecting that will be different now that they have a bigger war chest? We know that some of them with additional cash at their disposal could venture out into other markets looking for other opportunities. We've seen Access, we've seen Zenith do that. What are you expecting will be different in terms of how they move?
I think this time they should move. I think they will move with market segment, looking at the target of the market compared to what we had some time ago, where they were virtually everywhere, and that led to a collapse again. And so we have a very strong regulators also that also will help. And I think most of the banks, their recapitalization drive is mostly not even towards expansion so much. Most of them are looking at taking advantage of high ticketing deals that they feel that will be available due to the reform that have been made.
In newer sectors or the traditional sectors?
The newer sector. The newer sector, especially the fintech sector. If you look at some of these companies, most of them are in holding company. With those liquidity, they are planning to get better in their fintech space, and also trying to improve financial security, especially make sure that there's reduction in terms of fraudulent activities. In most of their recapitalization is towards building a very strong backbone and expanding also to other, like I just said, most of them are looking at the fintech sector, because that seems to be one of the newest addition into the Nigerian economy. So they are mostly looking at that, and they feel that they have the liquidity. In terms of expansion, yes, we could see some expansion. But like a bank like Assets has already said to its investors during the general AGM that we are through with expansion now. We want to begin to maintain momentum, and over the years we want to see how those acquisition will begin to drive in liquidity into our banking space, and also shareholders will benefit from it. If you look at Zenith's expansion is always strategic, depending on the market segment they are thinking to target. So UB has already done that, and he says that most of his recapitalization is actually to boost more infrastructure in their banking space.
All right, Muktar, thank you so much for talking to us today. Always a pleasure to have you with us. Muktar Mohammed, analyst at Assar Investments.